Hello, welcome to the weekly technical analysis review for Monday, November the 25th. I'm Rafi Boyajan at XM.com, and for this week we're going to be looking at the pound dollar, the euro yen, and the Aussie dollar. So starting first with the pound dollar, in the daily chart, we can see that the near-term bias is fairly neutral at the moment. RSI has started to tick higher, but looking at the MACD, we can see that it has been losing momentum since that peak at 1.3011 back in October. And the histogram is just below the red signal line, so there is some risk of further easing in the short term. At the moment, prices are stuck between the 61.8% Fibonacci retracement of that down leg from 1.3381 to 1.1957, so that comes in at 1.2837, and between the 20-day moving average, which is around 1.2880. And also slightly above the 20-day moving average, we do have the Tenkan Sen and Kijun Sen lines, so that's potentially looking like a sticking point for pound dollar if it attempts to break higher. If it does reverse lower and slips below the 61.8% Fibonacci, we've got a potential strong support area around 1.27, which is where the 200-day moving average is about to intersect the 50-day one, and then breaking that support region as well would send prices back inside the Ichimoku cloud, and that would erase the current bullish structure for pound dollar. And below that, further down, the next level to come into focus would be the 1.25 handle. If though pound dollar does regain positive momentum and breaks above the immediate resistance zone around 1.2880, we could see that October peak of 1.3011 coming back into focus, and then higher up, potential resistance point to watch after that would be 1.3180, which had been a previous important resistance area. So now let's turn to the euro-yen pair. It's a mixed picture looking at the momentum indicators. The RSI is fairly neutral, though looking at the stochastics, they are still pointing downwards. So there's a risk that euro-yen could slip below immediate support at the 50-day moving average at around 119.60, and then not too far below that, we've got 38.2% Fibonacci retracement of the up leg from 115.85 to 121.46, so that's at 119.32, and then further down we do have the 50 and 61.8% Fibonacci retracement levels, and then failing those as well, Aussie dollar would then head towards the long-term downtrend line, and if it was to break back below the downtrend line, that would risk shifting risk a resumption of the long-term downtrend. But as long as it holds above it, we could see the medium-term picture eventually turning neutral. But in order to get back onto more positive footing, Aussie dollar would need to break above immediate resistance at the 23.6% Fibonacci at 120.14. Not too far above that is the 20-day moving average, and then clearing that as well could see Aussie dollar retesting the high of 121.46 a few weeks ago, and then above that, the next key test for euro-yen would be the 123 handle. And finally for today, looking at the Aussie dollar, it's fairly neutral, and in the short term RSI has flatlined below the 50 neutral level. The MACD though has crossed into negative territory, so the risks are somewhat tilted to the downside, and we can also get a confirmation of that picture as well from the Bollinger Bands. We can see they have started to widen, and prices have been following the lower Bollinger Band, and immediate support is coming from the slightly above the lower Bollinger Band and at the 23.6% Fibonacci retracement of the down leg from 0.7081 to 0.6670. So that level is at 0.6767. Breaking below that level could see Aussie dollar heading back towards the 10-year low of 0.6670 from back in early October, and that would risk shifting the current neutral medium-term picture to a bearish one. But if though Aussie dollar does manage to break above an important resistance at the 0.68 handle, just above that we do have the 50-day moving average, that could shift the focus back to the upside, and then we do have the 38.2 and the 50% Fibonacci retracement levels acting as the next resistance areas before Aussie dollar aims for the 61.8% Fibonacci at 0.6924. That is potentially an important resistance barrier. It capped prices back in early November, and it's also we do have the 200-day moving average also at near that level as well. So breaking past that level could potentially signal a shift to a more bullish structure in the medium term, and then after that, the next key level coming into focus would be the 0.70 handle, and just below that we do have the 78.6% Fibonacci at 0.6993. So that's it from me. Thank you very much for watching, and have a great day.